self-employed have a tremendous amount of tax advantages that employees don't have. I'm just going to tell you, they really do. There's just a lot more you can do when you're self-employed for tax purposes than you can when you're an employee. I don't know how applicable that is here, but I still can't help but talk about it. So some of them, for example, I really focus a lot on these income shifting types of things, where you're able to pay people in lower tax brackets than yourself when you have your own business, and that creates all kinds of benefits for them. Not only is the person you're paying actually doing a job and learning something, this is good for your future children or your current children, but they also get huge tax benefits that you don't get. And all of a sudden it makes them qualified for all these tax credits that I told you to go back and read about that they wouldn't otherwise be qualified for. Now they're also eligible for a Roth IRA contribution that they may not have been qualified for. So there's just so many interplay things that come into family income shifting strategies that you got to repeat it because it's a huge tax window out there. Now, I love this one, and I'm not kidding you. Kavanaugh got giddy about this one. I just said, you know, if you knew Kavanaugh, he's so funny, the things he would get giddy of. But he just loved when I talked about talked about this one for years and years, and he didn't know about it. When I told him about it, he loved it. He repeated it over and over. So here it is. This one works even if you're an employee. You got to get your employer to cooperate with you, which you can try to do because it helps them a little bit as well. Have your next business meeting at home. What a great, unbelievable tax sale. I'm going to capture the other 50% of you right here and save you money if I didn't catch you already. Here's the thing. There's a set of tax rules out there that says you can rent your home for 15 days or less tax-free. It's been there for years. Don't think they're shutting, I haven't read anything that they're shutting that one down yet. So you can rent your home for any purpose that you want for 15 days or less tax-free. Don't have to claim that as income. So here's what we do. We have our business meetings at home. If you're a manager within a group of employees in your company, or your company is going to have a business meeting with the area that you work in, go to your employer and say, look, I want to have that business meeting at my home, and here's why. You want your employer to pay you a rent, a fair market value rent, for having that business meeting at your home, for that space that's occupied. And you want to try to have 14 of them, if possible. And you really do have to look at local rates. That money that gets paid to your employer pays it to you. They deduct it. They're going to say, well, but I'm not doing that. That's like giving you a free raise. You say, I'll tell you what I'll do. I'll make a deal with you. Just take it off my pay. Lower my pay. It's a great deal for you if they do that, and for them. They just saved FICA, the matching FICA that they had to pay for you in that of 7-point-something%. They saved that. And what did you save? You took that money off your pay, that's for sure subject to income tax, and got it into your pocket tax-free. Now, maybe that meeting's only worth $100 a meeting. So if you have 14 of them, it's $1,400 multiplied by about 30 or 40% when you federal and state tax affect it. It was worth the price of admission for today's class, if you can pull that off. Now, if you're not an employee and you have your own company, well, who's to tell you that you can't have your business meeting at your own home? My suggestion with it, okay, because I've been audited on this one. Videotape it. Don't not do any of the things I'm telling you to do. Don't just say, I had 14 business meetings. Have the business meeting. Make it real and videotape it. Mr. Agent, Mrs. Agent, here's the meeting. Here it is. Watch it. You're done. You've got a free tax deduction. So we like that one, and he loved that one. Employee, child, family members. I've talked about it so much. Here it is coming up again. Tax income, they're taxed at a lower rate. The child's contribution to a retirement plan can enhance their tax benefit. If child earns enough from the family business during college years, the child may be eligible to claim the Hope or Lifetime Learning Tax Credit that parents lose because of their AGI limitations. a child wages are deductible if, and you can read all the things that say when are those wages deductible. I put those things in here to tell you about it. So take a look at it. Next, another great one, family income shifting strategy or family loans. Let's stop on this one for a minute and talk about it. This is it's pretty cool. Instead of simply gifting money to a child, if you gift money to a child, you get absolutely no tax benefit for that. You gave your college, you gave your child that's in college money. They need that. Most college people have no money. So you gave them $5,000, and that's going to help them sustain themselves through the semester if they don't party too much. Okay? No tax benefit. Zero. You got no deduction. Nothing happened there. So instead I said, how about this? Instead of gifting them the money, consider making it a loan, a bona fide loan with a loan document that they're going to sign, and there's going to be real terms of that loan in there. If the loan is not repaid by the child, you may be able to deduct it as a bad debt loss. It must be a bona fide loan, which means it has an enforceable note. It has a fixed loan amount, it defines payment dates, and there's a stated rate of interest at fair market value interest rates. The interest paid by the borrower is deductible, so if you make this loan for your child and they used it, for example, to help them buy a house or for some business purpose, they actually can deduct that interest as well. So it's a way of, instead of gifting them money, loaning them money, and then possibly